Hey everybody, this is Jim at SP500chart.com. It's a little bit before 7 o'clock on Sunday evening, December 16th. We're going to look at the S&P 500 chart. Before we do so, I need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research, and you need to make investment decisions that are suitable for your personal financial situation. Even if I knew what your personal financial situation was, I'm still not a licensed financial professional. But I am a guy who likes to draw lines on charts. So let's take a gander at the charts. Okay, we're starting out here with a 30-minute chart because this chart probably is going to tell us about everything we need to know. At least well, yeah, I think so. You can see that late in the week we identified a possible new larger channel, which really makes more sense than this little skinny thing we've been looking at, this little green channel, because this green channel right here did not really take any of this prior 2 weeks peaks and valleys into consideration. I think it was legitimate, but I don't think it was really as all-encompassing as we would like to see, especially when you look at just how broad this descending channel was in the couple of months leading up to the breakout above that channel. You can see it here. We had this channel that really lasted, well, maybe not a couple of months, but about what, 6 weeks? Let's count them. 1, 2, 3, 4, about 5 weeks. But if you go all the way back to this topping pattern here, you could make the case that we were inside this channel for almost 2 months. So anyway, you can see how broad that was, and then to come out of that and then just make this skinny little channel right here, you know, that sometimes you see that, but more often you'll see something with a little bit more breadth to it. So going forward, I feel that this is probably a more reliable indicator than what we saw in this little green channel. Now, as far as the week goes, we had been expecting a move to the mid 1430s, and we got that, and we got just a little bit more. As you can see that midweek, the S&P topped out, at least for the week, around 1438, and yeah, roughly 1438. I can measure it exactly. Yeah, 1438 and change. So we topped out up here, and I'll remind you that we were looking at an inverted head and shoulders pattern back here from the early part of November on through actually to just before Thanksgiving. And that pattern had a target. It was around 1434, 1435. Now on Tuesday, I mentioned that I thought the high set on Tuesday was good enough to have satisfied that pattern because we did tag 1434, but you can see that the market wanted to put in a little bit more effort to do a little better than that. Then we entered into what really essentially amounts to a little bit more than almost 2.5 days of selling pressure, which ended on Friday with a slight break of this lower rising support line. My question is, whereas that is not necessarily technically significant, it certainly bears keeping an eye on, because we were expecting resistance in the more mid 1430s for a couple of reasons. For one, that really is kind of the area that is marked by the extended neckline from our triple top back in September and October. Okay, you can see that line extended. Tried on the week the 22nd. Tried the first week of November. Tried again and could not get over this line. We came down, encountered some panic selling here, it looks like, with short-term capitulation. Then the market rallied, got up over this channel, pulled back to it, and now started to trek back up. Now, here's what I'm looking for in the intermediate term. I'm asking myself, honestly, are we going to now see an inverted head and shoulders pattern form here? If so, then we would be looking at a pattern that could potentially be pointing us to the mid-1500s. And all it takes for that pattern to finish while I move this line, all it takes is for this line to send the market down, which it has done, and for us to stay over 1400, most likely over 1400. I would think for sure we would need to stay over the low 1390s, mount up a little bit of steam, come back for another try on this line, then take it out. If that happens, then I think you've got to call this this whole thing that we had marked between these two yellow lines. You have to look at that and say that was a bull flag that formed after a topping pattern, and we've seen this happen before. We saw this happen in 2010 in a pretty big way. I won't bother you with that chart right now, but this bears a lot of resemblance to 2010, what we saw after the breakdown of that little fairly decent sized head and shoulders top. So anyway, as we go into next week, what I am basically looking for is for the market to stay over this line, probably over this line, and hopefully stay within this channel. Then come back up, attack this line again, if not later this week, maybe after Christmas, and then potentially mount a New Year's rally that takes us out of this inverted head and shoulders. Now I've got to be fair and let you know that there's also a bearish possibility, and that is we're making a really big head and shoulders top. And if this rally were to fail to get over the neckline, and if it was to fail to get up to this level here, then we would possibly be looking at a rather large head and shoulders that has spanned many months, with this being the left shoulder, this being the head, and then another right shoulder. But if we look at this and expect some symmetry out of this pattern, the good news is we should have plenty of before that were to if this is, I think we would be looking at a neckline between the June 2012 lows and the lows of mid-November. So it would be a slightly upsloping neckline. So I want to keep an eye on that. But for right now, if we had it on a little bit less of a long time frame, I can definitely see the potential for for a bullish outcome from this pattern. But I mentioned last week too, this is something of a Rorschach test of a chart. And since it's a Rorschach test, that means that depending upon your personal slant, you can see it either way. So I want to be careful to present both scenarios, and we let the chart show us by which pattern is confirmed. Because where we sit right now, there's nothing confirmed. If we get over 14, we call it 1440, then we have a confirmed inverted head and shoulders pattern. If we break down, and we got a good ways to go before we get to the breakdown, but if we were to break down under, let's say, 1360, 1370, then we could be looking at a confirmed head and shoulders top of a greater magnitude than what we've seen in the past. So, guys, I think that about does it. I just want to point out one more quick thing, and that is we did see this smallish descending channel here off of this top at around 1438 and change, and the market has gotten over this descending channel. So, and that might be a little bit of a positive sign. Let's see what the futures show us overnight. If we were to gap up tomorrow and be over this line right here, let's say we were to gap up at the open into 1418, 1419, then I think that should spark a rally to at least come back and re-challenge this neckline, this old extended neckline from the head and shoulders, from the triple top, which is the potential neckline for an inverted head and shoulders pattern. So there you have it. I think that is about all I need to say for this evening. So look, guys, I really appreciate you watching the video. Take care this week, and then let's see what we learn in the chart in the days and weeks ahead. Oh, by the way, I want to remind you, if you're not a subscriber to sp500chart.com, it's cheap. Come on to sp500chart.com, check out just how inexpensive that is. So thanks again. Take care.